on TV, online, and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and this is Talk Your Book, and today we're very lucky to be joined by Michael Goldberg of Collins Street Asset Management fame. Now Michael, I believe you are the most capped guest on this show still. You're like the Scott Pendlebury of Talk Your Book. Thanks very much for coming back on again, and it must be a huge honour to be such an experienced campaigner of this show.
It is certainly a huge honour to spend so much time with you, Chris. It's been my pleasure.
Maybe before we get into your stock pick, if you could just give us a helicopter view of Collins Street Asset Management and how you guys look to invest.
Yeah, sure. Look, I mean, I think fundamentally in everything that we do, we love challenging the status quo. We love trying to find if there's a better way to do things. That works surprisingly well in equities, as my wife will attest, not so well when putting together IKEA furniture. And so, you know, we've launched a couple of funds, our flagship fund being the Collins Street Value Fund. It's done very well over the last few years. I think we're running at north of 14.5% since we launched it in 2016, so going on to 8 years, just over 8 years. And we have a couple of special situation funds for when we find an idea that doesn't quite fit the mandate of our man fund. We have an opportunity to invest there as well. So yeah, very pleased. We're a small team, 6 people. We're boutique and so very available to our investors, and it's been an interesting and enjoyable journey so far.
And what stock did you want to talk about today?
Well, I thought we'd talk about Carnarvon, which is an interesting business in the oil and gas space, both because we love finding ideas in maligned sectors and companies that are deeply, deeply unloved, and because as a simple guy, it fits right within my wheelhouse as what I'd almost call a cigar butt type value investment.
And so oil and gas industry exposure, maybe before we dig into the company and its history, which is interesting a little bit more, do you have a top-down view on oil at the minute as a company?
As a sector?
Well, yeah, does your company have a house view on oil as a sector?
Yeah, look, I think so. In fact, one of the special situation funds that we'd launched and we're now actually winding up was specifically set up to invest in offshore oil and gas services. So yeah, we have a pretty strong view on oil and gas. I think fundamentally, as a sector, it's been deeply, deeply misunderstood. And I think there's been a political, cultural agenda that has driven a lot of the decision-making, a lot of the financial decision-making for a lot of the companies that are connected to that sector. And it's created some very strange and weird and wonderful sort of circumstances. I mean, there's been a massive underinvestment in the sector for the better part of a decade on the broad assumption that renewables would almost immediately replace traditional energy, and that there'd be a rapid drop-off in demand for oil and gas and traditional energy in general. I think people fundamentally misunderstand oil in particular. You know, occasionally when I'm driving to work, we go past these protests where they've got the signage up saying, you know, end oil, end fossil fuels right now, and God bless them for their intent and their efforts, and I understand the concept and I appreciate it. But you know, when you drive past in the autumn and winter, they're wearing their puffer jackets and their non-leather shoes, which are of course made out of oil. I think people just imagine that oil is really majority used in transport. It's not at all the case. Anything that's plastic, anything that's artificial is going to have oil in it. It's in fact the most used commodity in the world. And so I think, on my understanding, the demand for oil is probably going to be robust well into the 2040s, even as we've seen supply come off materially. So if you ask me if I think oil is going to go higher or lower, I don't know how much higher it will go, but certainly I think it's going to be sustainably higher for longer. I don't think we're going to see petrol prices at south of $1.50 again anytime soon. And in terms of Carnarvon, it's a fascinating story, as is your Collins Street Value Fund's involvement with it. Maybe give us the history of Carnarvon. So Carnarvon's an interesting one. You know, when we first came out and mentioned in our reporting and in an ASX announcement that we owned Carnarvon, people came out of the woodwork from all over the place telling me about how they'd owned Carnarvon forever. In fact, I was having a chat with my boss, Charles. I bumped into him the other day, and he mentioned that his old boss used to walk around the office saying that every single portfolio needed to have a certain amount of Carnarvon in that portfolio. But the truth is, Carnarvon of yesteryear is not the Carnarvon of today. Things really changed for the business, at least as far as current investors are concerned, in 2018, 2020, when they made a big discovery in the Beddoe Basin region. They've got a main project called Dorado, which is huge. And really since then, the focus has all been on that project and bringing it to production. So what Carnarvon was is almost irrelevant. What Carnarvon is and what the prospects are for going forwards based on that Bedout Basin is really, really interesting.
So we'll dig into Dorado and Santos and their involvement with it shortly, but maybe let's start with Collins Street Value Fund and becoming an activist shareholder in Carnarvon. For those that don't know the terminology, what does that actually mean? And maybe just a little bit on what's that journey been like for you guys?
So what an activist investment means?
Yeah.
Okay. Well, I think there are different kinds of ways to invest in an activist sort of approach. I think quite a common way that we go about things, and this is especially true in mid-cap stocks and small-cap stocks, where it's a smaller board, they might not have all of those expertise that they need to have to run an ASX company. So I'm guessing, or I'd suggest the three real things that a board needs to be on top of is, number one, they've got to run the business. It's got to be a well-run business. Number two, they've got to manage the capital really, really well. And number three, they've got to communicate effectively and efficiently to set expectations from an investor perspective. And we've certainly found many, many times that there are companies that, say, excel in running the business, but might not have a real finger on the pulse of capital allocation, or might not really know how to communicate the story to their investors. And for those sorts of boards, we've certainly reached out to them. We've offered them books, we've introduced them to consultants and experts in the space, and occasionally some of those experts even eventually make their way onto the board. You know, it's I'd call it lowercase a activism. You know, it's non-disruptive, it's friendly, and hopefully beneficial. If things don't go so well, or if a company decides to spin their plan on a dime to the detriment of investors, then there's, I guess, capital A activism, where things get a bit more interesting. That can be a lot of fun and certainly very exciting. But I would say if I had to measure the risk reward in terms of effort put in for reward taken out, it normally doesn't stack up. But when you've got to do it, you've got to do it. And so, you know, historically, there have been a couple of companies, these were small cap companies in the past, where they sold their main asset. Good businesses, you know, running the asset. They said that when they finally sell it, they're going to distribute the capital. And so we bought into those particular stocks with the understanding that they'll sell this business, we'll make good money, and then we'll get our money back and look for the next idea. And then, of course, when the money landed, all of a sudden, the chairman had a wonderful idea, or the managing director's second cousin had a great idea, and all of a sudden, instead of getting this wonderful capital return, this money was being earmarked for whatever the next project was. And that's not okay for us. And so we called general meetings, we ended up negotiating with management, and eventually we got the capital return that we expected. It wasn't quite that extreme in this particular circumstance. With Carnarvon in particular, the idea for us at least was we were buying in at a steep discount to the sum of the parts, We thought when we first started buying in 2022 in the high teens, that we could probably see 35 cents plus generate out of it, just based on, you know, perhaps future M&A or a realization of that sum of the parts valuation. And the market didn't really follow. Before we got very active, I think the share price was as low as 12 cents. In fact, I think there was a Macquarie broker report which said target price of 10 cents because they're concerned about management blowing the money and I guess diversification. So what essentially happened was we thought the management were going to put all their focus and all their capital towards Dorado and that region. And instead they started talking about buying new projects elsewhere to keep them going and to keep themselves busy until Dorado's ready to go. And look, credit where credit's due. Adrian Cook, the former managing director, did a fabulous job picking up the Dorado assets and the other assets around the area. But we and the market were very concerned that they would blow the dough before we were able to realise the real intrinsic value that lived in those assets. And so we essentially got together with another fund. We had threatened to call a general meeting. The board got in touch with us and said, look, it's not necessary. And there's been some change on the board level since.
And so talk us through that Dorado asset, who the major owner of it is, why it's such a particularly special or attractive asset from your perspective.
Okay. Look, it's an offshore, at the moment it's mostly oil project, but there's massive potential for gas project as well, about 150 kilometres off the coast of WA, off the coast of Port Hedland, which I'm told in the west is not very far at all.
But certainly de-risks it from some of the environmental concerns you might get if it's closer to shore or onshore.
Absolutely.
Projects.
I mean, Santos have been dealing with the Northern Territory and issues around the Barossa Basin, where there were concerns about it being a bit closer to shore and all sorts of heritage issues and whatnot. So this certainly deals with a lot of those issues. There's no guarantee there won't be issues, as we're seeing in the world at the moment, but certainly much better place than had it been closer to shore.
Yeah.
The asset is huge. It's in an area that for some reason hadn't really been developed much historically. The board have referred to it as the most...
The Santos board this is?
Well,
or?
the Santos and Carnarvon board
Yeah.
have called it the most significant find in the Australian region in 30 years.
Yeah.
Santos was so excited about it that it was the primary and first project that they were discussing in terms of their growth profile in their 2023 full year presentation. So it's a huge area. They've got 2C reserves of about 162 million barrels of barrels equivalent. So 2C means they're pretty sure, not certain, but pretty sure. And 162 million barrels of oils translates to around about 26 billion litres of oil. So we're talking about a massive project. Shallow water, low cost. They were talking about $15 per barrel to produce, which is extremely cheap certainly relative to current prices. But the truth is, Dorado is not the whole story. I mean, that whole region is rife for production and rife for exploration. Carnarvon and Santos together have also uncovered a couple of other projects, one that they've called Pavo, one that they've called Rock, which adds about another 40 million barrels equivalent. So we're talking about 200 million barrels of production. And they're talking about going at about the rate of 100,000 barrels per day. So it's a big project. But if you're willing to embark on a journey into the lands of hope and dreams, they do have 3D seismic testing and other mapping that suggests there could be as much as 1.6 billion barrels of oil or equivalent in gas. So it is a tremendous project with fantastic upside, but of course we're really not paying much more than about $18 to $20 million for that, based on the cash in Carnarvon and the current market cap.
We'll get into more Talkie Book after this short break.
On TV, online, and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Yeah. Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
This is Talkie Book, and we're with Michael Goldberg. Michael, I think what might be really useful is to go through some of the parts of valuation. You mentioned how cheap Carnarvon looks in totality. Maybe give us your best estimates for what value you put on Dorado, and then an estimate of the other assets they've got on their cash, just to paint the picture of just how valuable and how cheap potentially Carnarvon looks.
Do you mind if I do the reverse?
Yes, please, by all means.
I think it's probably worth looking at the cash first.
Sure.
I think at the moment, Carnarvon's trading at around about a $330 million market cap. That's against cash, or cash that will be due to them shortly, of around about $315 million. So we're talking about an 18.5 cent share price against a 17.5 cent cash backing, which is quite unusual. Normally when you see that, there's an expectation that that cash will be burnt. That's not the case here. At the moment, corporate costs and ongoing costs are being covered by the interest that they're earning on their cash at bank. So that's a bit unique in the first place.
What percentage of that cash needs to be used to fund?
Ultimately, all of it will be used to fund the development of Dorado in the first instance.
Hence why you were so passionate about them not burning through it.
Correct.
Initially when you came
Correct.
on board.
I mean, look, our worry essentially before the change of the board was that management were going to use the money we needed for our primary project to pursue a project that we didn't need. And that always makes me uncomfortable. If you've got capital that you need, don't use it chasing profits or ideas that you don't need. But in terms of Dorado, I mean, it's obviously hard to assess true and genuine value until we've got final investment decision and we've got better clarity around costs and production, all that sort of stuff. But we have a general sense, and certainly we can use the sale of half of Carnarvon's exposure to Dorado. They owned 20%, they sold 10% to CPC, a Taiwanese oil and gas company, for about $225 million. Now that was a little while ago, and I think if it was done again today, that would be significantly higher. And then you've got Pavo and you've got Rock, which I think are probably worth conservatively another 50 odd million.
And they've got 20% of Parvo, is that right?
Yes. So they've got 20% of Parvo, and I believe of Rock as well. They've got 10% of Dorado. They have between 10 and 20% of a number of assets and projects in that region. If you look at the development value, I mean, again, I don't know how you would value 1-point-something billion barrels of oil or equivalent, but call it potentially $50 million maybe, and all of a sudden you're looking at potential value in there of 600 million plus, which is essentially almost double where we're currently at. But that's really just some of the parts. And again, I apologise if I'm getting a little bit excited here.
No, I like seeing excited.
and certainly what I'm about to say now is all based on bringing it to production and whatnot. But just looking at Dorado, we know it costs them about $15 per barrel of oil to produce. They're going to make, at current market prices, let's call it $50 to $60 per barrel. They own 10%. So if they're going to do 100,000 barrels a day, which is what the current goal is, 10,000 of those barrels would go to Carnarvon. 10,000 times 60 times, let's call it 300 days in the year. Let's pretend they have some shutdowns and whatnot. And we're all of a sudden talking about, the better part of 160, 180 odd million dollars. You put it on a multiple of 8 times, and we're talking billions of dollars all of a sudden. So again, there's a long way to get.
Is that
from
even
where we
not
are.
assuming you have increased gas finds in surrounding? Like, there's optionality for upside from there potentially.
Absolutely. That's talking about the oil that they have identified and the rate of production that they are proposing to start with. That's not talking about ramp up. It's not talking about the tremendous potential from the gas perspective as well. So yeah, some of the parts, when we think of the business, we think of its value, its intrinsic value, being between 32 and 37 odd cents. But that's based on today. If they do bring this into production, then of course we could be talking as high as, this is not advice, and I'm hesitant to predict target prices, but on 8 times earnings, you're talking about 60 odd cents per share.
Well, it's great to have you back on the show, and great to see you excited. I think potentially the most excited I've seen you present a stock. So I really appreciate you giving us the time, and always great to catch up.
Chris, my pleasure as always.
Thanks, Michael.